I'm Loan Officer Riley Kemmer, and this is Mortgage Support. User, the one who has lost rights. I was about to buy a house, but my credit score dropped 50 points just from paying off my car. Is this going to hurt my chances of buying a house? Unfortunately, the answer is yes. Any change in credit score can affect your financing, especially when looking to purchase a home. Because credit takes into consideration the average length of your credit accounts, when you pay off something like a car, which closes that account, that average length of time is going to get a lot shorter, which can actually bring your score down. So yes, before you make any big credit decisions, even if it's actually paying an account off, talk to your loan officer and make sure that's not going to adversely affect you. The good news in this situation is in a couple months, that score is going to come right back up. Adam Downing 95 asks, when is the most advantageous time to refinance a home? Well, Adam, hopefully the most advantageous time is going to be here soon. The reason I say that is because usually most people look to refinance when interest rates drop, and I know we would all love to see those rates come down quite a bit. But realistically, the answer to that question is it really depends on the individual. There's a lot of different reasons to refinance a home. Some could be to access some of that equity. Some could be to lower the monthly payment. What I like to look at is what I call the golden rule of refinancing, and it's basically the cost of the refinance divided by the monthly savings. If that gives you about 12 to 18 months, then it probably makes sense to refinance. If it's longer than that, then I would probably hold off and wait a little longer. Instagram user Michael Compass writes, would you recommend an assumable mortgage? Yes, I would recommend an assumable mortgage. For those of you that are unfamiliar, an assumable mortgage lets you take over the financing from the previous owners when you go to buy the house. This can be very beneficial because if they bought the house a few years ago when interest rates are much lower, you can actually get their interest rate for that portion of the financing, which can save on your monthly payment. Just keep in mind, not every loan out there is assumable, so not everything you're going to run into is going to have that option. These are usually going to be your FHA, USDA, and VA loans, so your government-backed programs that are going to have the assumable option. Rachel19 on Instagram asks, what are the different length options for a mortgage? Well, Rachel, the most common length mortgage is going to be your 30-year option. Usually when you see rates advertised online, anything like that, it's going to be referencing the 30-year mortgage. However, there are 25, 20, 15, and 10-year options, and even a couple oddball 7 and 5-year ARMs out there that are all available. OddFalcon8234 asks Reddit, what mortgage rate are you getting? Well, Odd Falcon, I think it's very common and natural to want to go online and ask others what interest rates they're getting. However, I'm a firm believer that comparison is the thief of joy. And the reason I say that is in every scenario online when you're comparing interest rates, you're almost never comparing apples to apples. There could be a million different reasons why someone else's interest rate is going to be different than yours. And for that to take away some of your joy and satisfaction for being able to close on your own house is probably not the best thing to do. In short, if you're worried your rate is competitive, reach out to me, your local lender, make sure that you're getting a great deal. Otherwise, take what you read online with a grain of salt. Not all loans are created equal. Miriam Mosqueda on Instagram writes, is down payment assistance only for first-time homebuyers? Down payment assistance programs are special programs that provide funds to help buyers with their closing costs and down payment when purchasing a house. These programs are not always limited to first-time homebuyers. In fact, off the top of my head, we have a couple that are not restricted to first-time homebuyers, Home Plus being one of them. So if you are interested and needing some sort of down payment assistance, make sure to reach out to your local lender and ask them if they have any programs that aren't only available for first-time homebuyers. Your AZ Realtor asks, what is the criteria for FHA? For an FHA loan, there are a million criteria. It would take me an hour to go over all the details, and quite honestly, I don't think our videographer wants to stay here that long. But what I think people care most about are probably the 3.5% down payment, so it's going to be slightly lower closing costs than most other loans. You're going to have a little more flexibility with your DTI ratio, and usually they're not as strict on credit scores. All right, last question for today from Hungry Hippo. They ask, how long will the loan process take? This is a good question. Loan process takes about 30 days on average once you've gone under contract on a home. It can be done much quicker. In fact, we've closed loans in 10, 12, 14 days, whatever it is. But usually when you try and cram that much work into that short of time, it becomes very stressful for everyone involved. Not only your loan officer and your title agents, but also the buyer. You've got to get a lot of documents in a short amount of time. We kind of set the 30 days as the standard just so everyone can enjoy the experience and not have to stress out too much. Those are all the questions for today. Thanks again for watching Mortgage Support.